Good morning, folks. How are we doing? I hope you're well. So I have two pairs on watch today, and those are euro dollar and pound dollar. So the one most likely to be ready the soonest in my try that again. The one most likely to be ready, in my opinion, and experience the soonest is euro dollar. Sorry, that was just my alerts going off, which is usually what happens when I start these videos. So why am I looking at this pair? I'm looking at this pair because potentially we could capitalize on a short-term move. I am aware of this little consolidation here where there was enough of an exchange of liquidity for price to smash through all of this volume here, okay, and go on a pretty big runoff, given that this is the daily chart. However, we can't deny that we have broken above this daily high here. I think it's even a weekly high, so a high that we can see on the weekly chart. We have spiked just above there, and we're starting to move to the downside, okay? We've got so this daily candle isn't closed yet, but if we zoom out to the 4-hour chart, you can see that we've started to get some impulsive momentum to the downside and negated much of this bullish pressure which preceded this move down, okay? Bit of an indecisive candle here, but we followed through and broken below that, okay? What I also like is that we kind of had the start of a bull structure here, which failed and broke straight through. We know that a lot of the time these failures of structure tend to be very aggressive in terms of moves in the other direction. We've also got an element of a bit of a scoop double top as well. I just screenshotted it there. I don't know why I did that. So what I'm looking for now, quite simply, we have a bit of a reversal structure leading into it. Okay, so we have a reversal structure leading into the start of all of this consolidation. And we also have another thing I like is we've got a series of gaps here. I'm more interested in this one specifically, but we have a series of gaps here to that low. And the start of all of this consolidation was here, which will become relevant. This low will become relevant in a minute in terms of my take profit, etc. So what I'm looking for here is I'm looking for price to just show its hand. I'm looking for basically the stacking of the orders. I'm looking for the institutions to stack their orders, which would typically look something like this. And if we get that, my preferred entry would be the risk entry within the structure like that, because generally speaking, you can get a tighter stop loss. Or I would look for the reduced risk entry on the break, and then we would have something in the region of about 4% to work with to that low, 4.77 there. And what I would do is, because my minimum when it comes to setting a take profit is 5%, I would set my take profit down there, okay, or perhaps even 90% of this range. So if we were to measure the range, so that high that we just broke above and broke back below, I'd set it about 90% there. So probably around there if I could get the 5%. So that is what I'm going to be looking for. And as I said, that's the start of the consolidation. It's the origin of all of this is there. So it wouldn't surprise me if we gravitate all the way back down to there and then perhaps form a deeper correction, even if we're going to continue in the forecasted direction. So I'm just looking for a 15-minute continuation. So 6 to 8 corrective 15-minute candles or 6 to 8 corrective 1-hour candles, whichever happens. And I'm just going to be monitoring this periodically by way of Google Calendar reminders. Okay, so we'll see how that plays out. Of course, we've got a bullish pressure here, so I wouldn't be surprised, because we've moved up like this. I wouldn't be surprised if this does turn into a 1-hour structure, and perhaps that isn't ready until, I wouldn't imagine Monday, because if you look at the amount of candles that would need to form, that would be a very wide correction relative to the move down that's preceded it. But let's try that again, because all the alerts are going off now. That was just pound yen. The market's going into absolute meltdown at the minute. I wouldn't be surprised if that is ready at maybe 4 o'clock, something like that. I am mindful that on a Friday, the liquidity tends to come out of the market slightly sooner, so I'm factoring that in as well. So that is euro dollar. Okay, so similar deal on pound dollar. This is why I don't like making videos at 7 a.m. or 8 a.m. because the market tends to go into meltdown and you can't speak because all the alerts are going off all the time. I prefer to do it earlier if I can. So we've had a bit of a bigger drop on pound dollar. So we do have, once again, we have an area of consolidation here, which is basically where, so we had all of this, and then this exchange of liquidity here was the one where price then started to go on a big sell-off, okay? where the pullbacks were very shallow relative to the move down which preceded it. So this is definitely an area of significance that I'll be paying attention to. However, once again, we have to remember that we're on the daily chart, okay, and that you can see we've had the momentum, we've negated all of this bullish pressure on the daily chart. So even though there is a gap from here to this high, we could be all the way down here. You can see we've got near misses there. We have a near miss there to this, and then a near miss to there. What this could be, even if we are going to take out that high, is it could be a move down to here to potentially tap into that, to basically retest all of this volume, okay, and then maybe we move up from there to take out that high that I showed you that we near missed to, okay. So there's still potentially profit potential to be made down to these lows. And as I say, we've negated all of that daily candle. 4-hour chart, we've got the momentum on the 4-hour chart. We've got the middle section within the structure. So the 1, 2, 3 middle section, break out of that, push to the downside. What I'm going to be looking for on this one, just because the drop is bigger, okay, so when the drop is bigger, price will tend to consolidate for slightly longer. And when the drop is bigger, I tend not to take reduced risk entries on the break, because what can happen is you get something like this. You take an entry on the break, you get tagged in, tagged out, and then price forms something slightly larger, okay, and then you can't manage it properly. If you get the entry within the structure and price does something like this, then you can usually get your risk off the table. If you've got your stop above, get to break even, okay. I'm not concerned about this at this moment in time, because you might be thinking about, what about that sharp move? Well, if we just measure this whole range, so I'm measuring from bottom to top, in terms of this whole range, this low here is 60% of the range, okay? So if this was going to be significant for a move to the upside, you know, we don't normally see something like that then pushes to the upside, okay? So I'm not concerned about this at that point as being significant. This, to me, does not hold more weight than this, simply because you can see it on, you can see it on more time frames, okay? So the higher the time frame, the more weight it holds. So what I'm going to be looking for is the following. I'm going to check pound yen in a minute just to see what's going on there. So I'm looking for a 1-hour structure. So that would be 6 to 8 corrective 1-hour candles. And then I would look for the entry within the structure. And then if we were to measure the impulses, I would target here, this low, because that's the near miss to here. And just because there's enough profit, there's 7.69. So that meets my minimum requirements in terms of the 5% minimum when it comes to take profits. If we just measure the impulse correction and then potential continuation, that actually lines up with mathematically with that as well. And if we did the same on, let's do the same on euro dollar, because that doesn't, if we just measure this, so I'm measuring from that impulse, okay, measure it from there, that doesn't quite line up with the low. So maybe we form more corrections along the way, which give us the volume that we need to make our way all the way down to there, to these lows. But either way, I'm satisfied with that. The criteria is being met. And if this just does what it might do, if this just keeps pushing up, try that again. If this just keeps pushing up, okay, then I'll just take this off of watch, because that is not a structure that I've learned to see. So if it's an uncommon structure, there's no point getting involved in anything that doesn't look like anything you've learned to see. So we'll see what price does. The price action's been pretty wacky as of late, it has to be said. And if we get wacky price action, then I'm just going to leave it alone. I haven't been taught to trade wacky price action, and it's not something I've tested either. So if it's not something you've tested, just leave it alone. Anyway, that is what I'm going to be looking for today. Those are the two pairs that I haven't watched. And of course, if I do place a trade on either of these pairs, then I will bring you a trade recap on that trade with regards to that trade on Monday. Have a great day, folks. Have a great weekend, and I'll see you again in the next video.